Hello everyone, good morning. It's your favorite coach Larry FX Academy, and today we are going to be talking about the Volatility 25 index. Now, if you can look at the chart, you clearly see that this chart is currently within a range, and we talked about it earlier before now that this chart was in a range and we were going to just be trading within this range. But now, what helped us to be able to identify this particular range in the market? Now, what helped us to do that was this MT5 section. Now, this is the MetaTrader 5 section for the Volatility 25. Now, one thing we easily did was, the first thing we were able to do was we checked the higher time frame. So this is the monthly time frame of the Volatility 25, and it simply tells us that the market is in a downtrend. You understand? It's in a downtrend on the higher time frame. Now we go down to the smaller time frame, and you can now see that there's an extension of same downtrend on this particular weekly time frame. So that being the case, we can now go down to the smaller time frame. Understand? So we can still just check the daily time frame, which tells us that we got a break of trend line, and our anticipation for this market is for it to clear this low, and then any other thing can continue from there. So now, that being the case, we would simply go back to this place. Now on this interface, we simply have this as our lowest point that price has attained or gotten to. Then this as our highest point price has attended to. Now, aside those two levels or two areas, we have this as a point price frequently tapped. If I should bring it down, you see price got into this point, it dropped, got in here, dropped, got in here, and it dropped again. Now that is a very helpful information, because if we should put this at this point here also, if we should put this two at this area again, we'll find out that price got to this point several times. It got here first, and from this point it rallied to the upside, it got here again, rallied to the upside, got here again, and rallied to the upside. So it's a very helpful information. It helps us to be able to identify which area we are looking out for on this particular market trend. Now it is in a range, quite alright, but now we are trying to break the range into a smaller trend for us to be able to identify what we would be doing on the market. Now I clearly have a resistance here and a resistance here, which helps me to be able to identify that this is a trend line break. So having been able to identify that this is a trend line break, I now extend my chart to be able to pick this low, and extend it all the way to this side. Now when I do this, it clearly helps me to understand that there was a break of trend line at this point. You understand? So for me to see this information clearly, I have to go to the smaller time frame. Now on this smaller time frame, what can I easily see? On the smaller time frame, I can easily see that I have a break of trend line at this point, which is point 1, and this point B. So I just have a clear break of trend line at this point. Now what is my anticipation for this market? My clear anticipation for this market is a downtrend, a drop to the downside, and then we can now begin to take any other market reaction. So during this drop from this high to this point, after we got this break, we can go to the smaller time frame to be able to see what we would like to see on this market. Now the easiest thing we saw was price dropped, and it simply gave a break of this area here. So by virtue of price giving us a break of this area here, what were we looking out for? We were looking out for price to get into the 0.79 level and drop, but we didn't see that. We didn't see that coming. Like, it didn't even appear. So you can see that we have this area where we saw price doing all of this move to the upside. Now, to be able to enter this particular trade, what we do is we simply mark a pattern. So it's like a trend line, but some other persons call it a pattern. Some say it's a pattern within a pattern. So you mark the pattern, which helps you to know that, identify that whenever price goes up, drops, goes up, it drops, goes up again, tapping this line, it drops. So it only ranged around here, but at the end of the day, it eventually dropped. So a repetition of what happened in that area is what happened here again. If you can see, now connect our trend line. Connect it again from this low. So what did we easily see on this particular one? We clearly saw that whenever price got into this zone, it dropped. It rallied up again to this area and dropped again. Now, how are we going to be able to enter from this particular trade? Understand, using our formula. Now, the first thing we can see, this is just to be able to identify that, okay, we're having a smaller wave. So what we simply do is we mark our liquidity grab, and then we mark our break of structure. So if you don't see this formula, you don't just enter. If you're using our formula, our liquidity grab, break of structure, and then we identify our swing high and our swing low. So that way it guides us to be able to enter a trade. Now, what can you easily see that happened? If you had marked it, you'll be entering from the 0.618 and 0.79 level. But what can you see? Price got into it and tapped our stop loss exactly at this high. So if you were able to enter again, then you'll be able to catch up this whole long move. Now, that was the entry we would have gotten using the Fibonacci 2. Now, aside that, what was the formula that helped me to be able to enter this trade yesterday and even add more positions? Now, I simply saw that there was a form of resistance here using our order block. So I simply saw this form of resistance, and that thing again I saw was this. So this was something I saw again, which helped give me more conviction that this price was going to sell. So how do I mean? I simply saw that there was a form of heavy rejection from this point. Price not willing to push to the upside. So that helped it to drop. Now we had our trend line break from this point to this point, simply telling us that the first point we'll be looking at for price to get to is this point, which is close to that. And whenever, what are we going to be doing to be able to pick another entry on this market? We'll clearly wait for price to break this point, possibly give us a rejection into this point, and then we can ride continuously to the downside. And where is our final take profit? So in order to help you, so this is our final take profit. So if you have been able to enter here, we would simply be holding. So I actually intend holding this market until this point. So I simply would watch. I'll take some partial profits from this point and still hold it. Let's see what we are able to do, if this can be one of the best swing we will catch for the year. Now, that being the case, one thing I can clearly see is on the 15 minutes time frame, I think the 5 minutes time frame, I saw something. Because sometimes when you're trading on the higher time frame, when you need entries, you have to go to smaller time frames to pick a very good entry. Now when I saw that trend line, I was able to spot this again on the smaller time frame. So I got a bigger trend line break, and I was able to spot a smaller trend line break off this range. So we saw that price got into here, rallied to the upside, bounced on this trend line, rallied up, broke it, rallied up, and from this point we took another sell, and then it dropped. The moment it hit this trend line, I actually hopped out for my profit, and it retraced. You understand? It broke, it retraced, and then we can see it clearly dropped to the downside. So this is what we have for the volatility 25 index. Do make good use of this information. Understand that we are on a sorry for that. Understand that we are on a downtrend. All the trades you should be looking out for on the volatility 25 index should be sales, nothing other than sales. That's it for the volatility 25 index trade. Do have a wonderful day, guys. Peace, one love.